Welcome back to Markets Tea. So today's video is going to be about. I want to talk about all this recession nonsense that has been going in the markets lately. It has been a topic of discussion for the past 3 years actually, since the COVID started, and everybody has been praying for a recession that hasn't hit yet. I just wanted to share my views on it and discuss what the market is going to look going into 2024. Of course, today was the first trading day, and we saw a nice dip in the markets. So, I'm going to divide this video into two parts. Everything is going to be in one video. But the first part, I'm just going to talk about pure psychology, and we're going to talk about recession and all those things that have been going on in the markets. In the second part, I will explain using charts, uh, and we'll hit on some topics that are related to 2008 as well, because that is the most comparable scenario according to most people these days. So I just wanted to hit on that. All right, let's begin. All right, so the very basic definition of a recession is that in a case of recession, or what leads to a recession, is when people start saving money, they're not spending it, they're just keeping it in their accounts, and this starts a cycle of recession where there is no growth in the economy. There are job losses due to this reason, because there are no earnings in the specific companies. As we said, when people are not spending, there won't be any earnings, there will be job losses, no growth, etc., etc. In the current scenario, what happened was, let's go back to 2020. The Fed printed money out of thin air and they pumped it into the markets. Now, this is the part where people don't understand. When you pump in trillions of dollars into the economy, the basic economics is that it starts to multiply. What does that mean? So if you put in $1 trillion in the economy, it's going to come back at you with a 2 or 3x force. That means there will be growth. I have a few very intelligent people thinking inflation is bad, but let me tell you, inflation is what fuels growth. Growth is inflation, right? So as the economy grows, there will be a steady inflation. Yeah, hyperinflation is bad, but Fed has more or less controlled it. Now, as for the recession, people have been yelling, these are baseless claims. The unemployment rate is at an all-time low, and when everyone is working, you cannot have a recession. Can we have a recession in future? We don't know. There is no way to find out. That is why recession is always announced in hindsight. You go back in time, you will see that whenever a recession is announced, it's always in hindsight. So there's no way to know. Now you're seeing people tell you that their indicators are suggesting a massive sell-off is coming. I'm just gonna tell you straight up, there is no indicator that can suggest a market crash on charts. You don't know whether the dip that is 1% from the top is the start of a crash or a normal pullback. You cannot find that out. You only find that out once charts start to show a proper downtrend and a proper move forms. But that is more a week to week basis, right? Market is designed to go up over time. So even if you play a downtrend, the best way to play is take it a few days at a time. Because when you take it few days at a time, you don't buy big positions, and you look at how the chart is forming for the next few days, so on and so forth. When you're buying a long position, you know that over time it's gonna go up, so you can buy 2 years out, 3 years out options, or shares, etc., etc. So that is one thing. Today, yes, it was a bit extreme, the dip, but you have to understand, market has been moving straight in a straight line up for 9 weeks now. It needed a breather. The problem lies when people start buying short-term expiry options. See, that's where the money is lost. Why was there so much destruction in the accounts? Overall, Twitter, Webull, 2023 market went straight up. How can you lose money when market is going up? Because people keep finding new ways to lose money, right? You don't get involved in short-term options. 0 days to expiry is one of them. 1 day, 2 day, 3 day expiry. That is not something that I do, right? If market people think it's profitable, right? But how is it possible that market is going up for 2023 straight up in a straight line and you're losing money? That means something is wrong. And I'm telling you, this is the biggest destroyer of the accounts. When people have no patience, when people look for quick 1000% gains, that is where the things start going wrong. If you buy options few months out and you use your proper risk management, you don't go all in. The market was going up, it was not hard to make money, right? So that is one thing to keep in mind. And as for all this fear mongering that is going on, that is going to remain. Market is supposed A bull market is supposed to climb the wall of worries, as they say, right? When everything is positive in the markets and everyone is saying that everything will go up, that is where usually tops are formed, right? Whenever there is this fear mongering that crash can happen anytime and this pullback is a crash, this news is bad, this news will spark a crash. This is all part of the bull markets, right? When the market is going up, what it does is basically it starts to shake off people, right? You cannot have basically everyone long in a bull market. That is not possible. So what market does is it creates a short-term pullback, like a 10% pullback at 460 on SPY back in July, August, right? It touched 460, market got down 10%, rallied back up. This is done to shake out everyone, right? You cannot have everyone long. Market is not supposed to pay everyone. This is where things go wrong. Let's say you had, just gonna share a random example with you. Let's say you had a 470 call expiring March 2024. You bought it back in when SPY was 460. You bought it for whatever dollars. If you had that vision and if you knew that markets will come back up and you studied your charts properly and you averaged down on long calls, you made very decent money when the market turned around. Was it extreme? Yes. Could you have positioned better? Yes. But how would you know that the pullback has started, right? You find out once the downtrend is formed. The key here is trusting the charts, right? You don't want to be trusting someone's opinion on Twitter, someone's opinion on Webull, looking at the market on a 1 second, 1 minute chart, it's down, and then panicking and selling your entire position. That is not how you will make money, and that is not how you will make money in the long term either, right? For those who want to be full time traders, patience is the key to success here. Even in job, right? If you have one bad day, doesn't mean you quit your job. Like same with trading. You just have to have patience. You have to look at the charts. One thing that I have noticed is what strikes fear and makes people panic sell is looking at P&L. So oftentimes I see people start refreshing their profit and loss every 2 minutes, 3 minutes, 4 minutes. That is not the way, right? You should be looking at the chart, you should be seeing what pattern is forming, and according to that, you'll be moving your positions around. With options, it is very common for them to swing down 50%, up 50%. That is not something that you should be worrying about. Keep your risk management, do not over leverage. That is the key. Just because market is supposed to go up doesn't mean you go all in. That is never a good strategy. That being said, I don't see any problem in the markets so far, right? If I ever see that, and I'm not stuck on my bias, this is not my bias. Those who have been following me, they know that I don't fix to one bias. If I see something changing, I will change immediately and I will come here and I will also tell you that I'm changing. I'll also post it on my Twitter that I have been doing. But you don't need to have that ego in the markets, right? If market is changing, you will change too. So far, this dip that everyone is talking about, I'll come to this point later as well on Apple and other stocks that have had a very nice dip today, and I will talk about that, what's happening, why is that. But in general, the dip today is is not something you should be fearing, right? This is a market giving an opportunity to buy. Of course, people will not buy because of the reasons that I mentioned. They are fear mongering, they want more. See, understand this. The person that is trying to tell you that I will buy SPY, the SPY ETF, the S&P ETF at 410, why did they not buy when it was 410? Because they don't like to buy. They like to fear monger, and they like to create fear, and they will never buy. Why didn't people buy Apple when it was below 90? Sorry, Google when it was below 90? They will not buy. If they didn't buy it then, they won't buy it now. They will never buy it. They will keep crying. That's how some individuals are, and market is full of them. All of these per se furus that I keep poking fun at on Twitter, these are all like that. When a mega cap is falling 50%, you don't buy, and then you pray for a 10% correction to buy. That's stupidity. They haven't bought it then, they won't buy it now. Even if the market falls 20% from here, I'm telling you, these people won't buy. They will crave for more and still miss out. That's how things work in this market. Some stocks are expensive for a reason. They will always be expensive. For example, Apple. Even at 120, 130, people thought it was expensive, right? So they didn't buy. And even at 185, 190, they still think it's expensive. Some stocks are meant to be expensive. That is how the market works. That being said, as I mentioned, all these fear mongering people, they just, I don't know what their purpose is. They like to create fear. They like to look for a bigger dip. I don't know what that is. I'm not going to get into that. But I'm telling you, even if the market falls 20% from here, they still won't buy. That's how some people are. This the debt issue that is going on, that the debt is unsustainable, and it will create a massive crash. This that. Just gonna touch a bit on that. Okay, so North America as a whole is a debt-driven economy, right? We have debt for everything. We have debt for phones. We have debt for cars. That's how it is. It is not a bad thing. It's not at all a bad thing, and I'll tell you why. Why is a company like Apple only in America? Why is a company like Google, Amazon, and Tesla, Google, Amazon, etc., they're only in America and not other countries? There's a reason for that. First, we are a debt driven economy. We have given them that 0% interest rate and the free money to innovate. That is how America rules the world, through its companies, through its corporates. All of the biggest companies are in America. And people are saying that America is going to fall and it's going to have a crash and it's going to be a top and this and that. So understand this, that debt is the reason for innovation. And American economy is innovation driven, right? We have the biggest companies. That is how America rules over the world, right? It dominates the world, right? Through its corporates. So that is one thing I did want to touch on. Why don't other countries have it? Why doesn't Japan have it? Why doesn't China have it? They can't, right? America has all the right ingredients, right? We have the reserve currency, and we have given this massive 0% interest rate environments for these companies to grow in, right? Take Tesla for example, right? They were given massive loans from the government at particular interest rates when it were low, so on and so forth, right? So these companies, they burn money for years. How are they able to do it? Can they do it at 7% interest rates? No, they have to do it at 0% interest rates, and we have shown significant growth, right? So this is what I wanted to touch on, that all this, the debt is going to explode America. No. Second thing, innovation is what leads America. Either that's the internet, either that's the new AI hype. See, all these hype, when they come, yes, a sort of overinflated stock market is there and valuations go high. But you need to understand, right? Once this innovation wave comes in, you see a lot of companies coming in. Nvidia, for example. Again, this is not a recommendation. I've already said that I'm not long nor short Nvidia, right? I'm just giving an example, right? Nvidia went to 500. Nvidia is showing significant growth in the AI sector. So you have to see that, right? And then there's OpenAI being valued at 100 billion, and they're looking to raise money. You think they can raise money at 100 billion valuation in other countries? No, that's only possible in America. How is it possible? It's all this debt that is financing these innovations. As long as these innovations keep happening, it is hard to stop or hard to put a top on American economy. And if the economy is fine and the economy is innovating and growing, then the stock market is going. It's all interconnected, right? That when something is talked about too much, for example, this recession, when everybody is ready for this so-called recession, it won't come, right? Because everyone is prepared. The point of a recession is to wipe out wealth. When everyone is ready for it, everybody is cautious, right? Everybody is cautious. So why, how will the recession come? So my opinion is that the recession may come, but it may not come right now, right? When it's going to come, no one knows, right? You cannot find that out. Market will tell us, charts will start forming, and we will know that there's a time for correction, recession, whatever that is. Wasting time on deciding when the recession is what kept most people outside of the markets and missed the entire rally. Will there be times when you have one or two losing trade? Yes, that's common, right? You cannot have 100% win rate. That is just not something realistic. So my suggestion is keep your risk management, right? Follow the trend, buy good companies, and ride the wave up. When there is a pattern of correction forming, I will be telling you that I think that I will be coming here and then I will be telling you that I think so and so will happen. If I am wrong, I will accept that as well. I have, like I said, there should be no ego in this market, right? That being said, we have been long the past November and December were good months for us, and now going into January, I still feel that long is the way. Once we cross all-time high on SPY, then I think the market will do like a blow off top kind of thing, and we'll see how patterns form. But for now, I don't see any problem. Any dips are good buy opportunities, in my opinion, right? No advice, right? There's no particular advice to buy or sell, right? It totally depends on you what you want to do. I think the run will continue. That being said, there's one more thing I did want to touch on. Going back to the 2008 topic. See, in 2008 there was a genuine scam, if you will, if you want to call it that. They were giving out mortgages, like anything, and then which led to a bubble. In 2023, 2024, 2022, there is no scam as per se, right? This is a normal business cycle that took place. I explained this in one of my videos recently as well. When market was falling in 2022, there were stocks, mega caps being destroyed 50-60%. There was nothing wrong in the markets, in the economy, on the ground. People were not losing jobs, like there was no drastic jump in unemployment rate. Rather, it went down, right? The unemployment rate. So you need to understand, right? Market does not follow the economy. Market is a leading indicator, right? Market is a discounting mechanism. You have had your 50-60% drops, and if you didn't buy it, that's on you. Going forward, I'll also share some charts from 2008 to discuss how the 2022 fall was and what people are still expecting and being stupid. That should put a perspective, and towards the end, I will also share some of the charts that I think look good going into this new year. Yeah. All right. So let's get into the charts of 2020. Sorry, 2008. I'm gonna show you something here. This is SPY. I'm gonna put a weekly chart here. Right. So this is the 2007 top. That's the '08 financial crisis. A 57% fall in the markets when there was a particular scam that was exposed with the housing markets and all. Now, take a look here. Roughly a 30% fall with nothing wrong on the ground that happened in the markets. And people think this is less, but I will tell you why. What's the difference? I'll tell you. Give me 1 second. Just wanted to touch up on one more thing. Take a look. So this is a bull market that started in 2009. And over the bull markets, there's one thing that a lot of people miss out. During bull markets, 10 to 15% corrections are healthy. That happen. It's not a crash, it's a part of a bull market, right? See, for example, here, this bull market started, there is this correction 20%. There is this correction 16%. This correction 20%. This correction, so on, and then this correction we had, the recent one, so on and so forth. So these corrections are part of the bull market. There's nothing to be afraid. Use them as a buying opportunity, right? If you are a long-term trader, this is for the long-term trader, investor, of course. This is not for the short-term trader. If you're a trader, looking at the macro is useless, right? Market goes up eventually, has nothing to do with being a trader, right? If you're trading a, let's say, 2 months out option, and your reasoning is over the time market goes up, that's stupidity as well, right? Because you're looking for 2 months out. You don't say that the market is going to go up over time. You look at the charts for the 2 months out position, and you play accordingly. This is purely for like long-term stocks and those who like to buy the retirement account but have been sitting on the sidelines, because apparently, according to all the experts, the major crash was coming in 2022, which did came and people missed it. So this is what I'm talking about. Now, let me show you something interesting. This is Amazon. This is what we drew back in the last video. Anyways, all right. Let me show you something. A 57% fall in Amazon. You think this was just the minor dip in 2022? You had a proper crash. People did not buy. See, it came. So this was the COVID low. This was the COVID low. It touched the COVID low, and people did not buy. What did I tell you? The fear mongers, they don't buy, right? They only want to fear monger, and any type of dip to them is useless because they're not going to do anything about it. People did not buy here because all I was hearing is it's going to fall here to $50, right? You touched the COVID low and you went up. People did not buy, they missed out. Talking about long-term investors, of course. Stupidity, right? Let's look at another one. Google. This is one of my favorite ones. 45%. COVID low was 50. This was 82. It retraced. So if you're familiar with the Fibonacci, look at this. Came here. People still did not buy. and then they're crying Google is expensive. What are you expecting? Google to be replaced by Yahoo? See, all of our life is now dependent on Google, right? And if people are saying this is expensive, like if Google disappears from the earth for one day, just imagine how the life would be, right? So stupidity has been going around for a long time, and it will remain there. Market, as long as people are fearful, market keeps going up. Once everyone is ultra bullish, like in 2021, market puts it at top. That's how it is. When everyone is a buyer, that's the market top. When everyone is a seller, that's a market bottom. Between that, the bottom and the top, when the market runs, crash will come, is what's always trending. That has been pre-COVID, that has been post-COVID, that does not change. Another thing I wanted to show you, let's take a look at this. See, a 40% drop in 2022 for Microsoft. So when mega caps are falling 40-50%, that is what a crash looks like. Just because the index did not fall 40-50%, you cannot say the crash did not happen. The crash did happen. People were stupid enough to not realize that, see, there are a lot of things in the market. There are pension funds, there are 401ks. There's a lot of moving parts in the market. Doesn't mean that index necessarily needs to fall 50% for it to label it as a crash or a major correction. If stocks itself are falling individually, that's also an individual stock crash, right? Falling 40% for a stock like Microsoft, this is no joke. And see, this was the pre-COVID high, 189. It came to 212. It erased almost all of the COVID gains and then bounced back. What, I don't see anything wrong with that. If you are an investor, long-term investor, and you did not buy, then you're following the wrong things. I keep saying this, stop following people on Twitter and then people. For them, everything is bad news and it's gonna crash. That's how it is for them, right? They have been saying crash, crash, crash. Crash already happened. If you did not buy, see, the market discounted all this. It erased all of these gains. So I need to say that. Now going back to Apple. Now, what did I say about Apple? Apple is a company that historically has been expensive. It is going to continue to be expensive, and there is reason for it, right? Apple has been buying back shares at a record pace. Apple, in the last 10 years, I believe, Apple has bought back $900 billion worth of shares. Almost $1 trillion buyback. That is why the stock is expensive, right? The biggest buyer of Apple's share is Apple itself for the past 10 years. What do you expect the stock to be, right? But nevertheless, it fell from here almost 33%. For a $3 trillion company, this is a lot. And yes, the sales, the revenue has been flat. It hasn't fallen, right? It has been roughly flat. There was no significant fall in the revenue. So that is something to mind as well. 33% in the fall in the stock. At that time, people did not say that, oh, this market is scam because it's falling, or no revenue, the revenue is not falling that much. Why is the stock falling 33%? No, right? See, why people love crash is because it's quick gains, right? You buy puts, a big sell comes, you instantly make 100, 200, 300% on those puts. But in long term, when you look at your portfolio, the big gains comes from being optimistic in the market, right? The quick gains come from being pessimistic, but the big gains comes from being optimistic. So that is something to keep in mind, right? Just because a stock had a dip, 1%, 2%, 4%, 5% dip in the markets, like Apple had, right? People, you don't need to call it a a major crash, right? You need to understand. See here, let me show you this. Look at this move up. Almost a straight line. Straight line, bull flag, straight line. Right? Now, also I'm seeing this a lot of this nonsense that oh this is the double top. Me personally, I don't think this is the double top. Why? Here's what I think the stock does. Where's the tool? It forms a cup and handle and then it goes from here. This is what I think the stock does. It will get everyone bearish here. Oh look, double top, it's gonna crash and go right back up. Now, if it happens to fall, yes, of course I said I will change when the market changes, but I don't see that happening, right? I don't see the stock falling all the way back, right? I think it just creates a bit panic and then moves right back up. And I also think it can move back up in straight line. Don't underestimate the stock in the market itself. Back when SPY was oversold to the levels where it was not supposed to be, if it wasn't for the Hamas news, SPY moved back in straight line. I'll show you. See this? Apple is not supposed to be here. Can it go back up? We'll see. Will it go that violently? We'll see. But I don't think this is what people are saying this to be, that this is a double top. I don't see that happening, right? So this was Apple. Question is how I see markets performing in 2024. So I'm gonna give you the first move, basically what I see happening, and then we'll once that move occurs, we'll reanalyze it, of course, and form a different view, or whatever the pattern is at that time. So what happens first? So I'll be discussing the SPY, how I see this happening. All right, gonna move to a daily chart. This is one more thing. If you want to make an view of the markets a few weeks, a few months out, daily chart is what you should be looking at. Now, all right, here we see. So this is the daily chart, right? This was the dip today. We had a nice. I'm gonna show you. Near the end of the day, we had this monstrous move back to here. Now, as for what's gonna happen in the January and February, what I think is here. So you see, this was the thing we talked about last time as well. An area of double top that people have been discussing for a while now. I'm gonna remove this. I'm gonna draw a box that gives you a better picture. This. Now understand the analysis you have to also look at. For the analysis, charts, yes, it's one part, but also look at the market psychology, right? Market psychology is a very important part of understanding how the next move is going to play out. Everyone knows that most gaps fill, right? This is a gap, this is a gap, this is a gap. So what do? I just sit here and let the gap fill and I buy? It doesn't have to fill. There's still gaps from 2008, 2009 that haven't filled, right? Those gaps have never filled. There's gaps from COVID lows that haven't filled. Doesn't mean we wait and we sit and just let the market do its thing, come back down and buy. It may never come back down, right? When I say it may never come back down, I mean like in short term it doesn't come down. Anyways, so the basic psychology that is going behind everyone waiting for the dip, And there I've seen a lot of YouTube videos apparently talking about this too. Why the market needs to dip to 440 first before going up. So this is where the major money is waiting. When I say major money, I mean of course the retail traders and the small traders. Everyone wants a dip to 440, and then they're like, okay, we'll buy this dip and then the market can rally. I don't think it comes here right now. That's absolutely a no for me. That is my opinion. The second big area that everyone thinks will come is this 460, because this was, as we spoke about it, remember in the last video I said 460 was the most talked area of on this Twitter and all these news and everything. I don't think it comes here either, because people are still waiting to buy here. 460 and then all-time high is what I'm seeing. So what I think happens is market plays around here for a week or so. See, it already went to 467. 467 it was, I think 466 something was the low. No, 467.82. So it already came down to 467. Can it come here? Yes, I think it just teases a bit more. Can I think? So this is not the short-term view. Basically, this is what I think happens in the next 1 to 2 months. I think it just comes down a little bit more, just to tease everyone, and it goes right back up to 485. That's what I think happens in the next 2 months. Right? There is way too much money waiting here. Understand this. If we get here, a possibility of 440 goes up exponentially. Because what happens is there are buyers here. If market reverses from here, then these buyers will have a significant rally, right? Market does not want that. So it will try to flush this out. If it goes to 460, expect it to go a little bit lower. 440 is a possibility, low 450 is also a possibility. If it comes here. I don't think it comes here yet. I think it goes back up from these levels, and then we have a proper dip to 460 and 440. That's what I think happens. Everyone is too ready to buy this dip to 460 and 440. I don't think it happens yet. Similarly, if you remember, I posted about this on Twitter that this was a massive head and shoulder. Everyone was shorting over here, this area, because everybody thought this was the shoulder. What did market do? Market went up. Everyone forgot about it, and then this head and shoulder played out. Expect something similar, right? Way too many dip buyers here. But I'm gonna also tell you this: when the market comes down after going here, 485, 490, when the market comes down here, and here, the crash will come. News will trend again. All that hashtags on Twitter and everything will start trending. People will start calling it a crash. But like I said, 10% drop in the bull market is common, right? It doesn't happen now. I don't think it happens now. It happens once we reach those all-time high. We break out properly. Everyone gets bullish, and that's when the market corrects about 8 to 10%. The market acting in the beginning of 2024. Once the patterns play out and it hits my target, I will come back and then I will explain what I see happening next in detail as well. So this was it for the video. I just wanted to add one more thing. The way I'm seeing people talk, it's like everybody thinks they're smarter than the market, right? A $30 trillion market is not stupid. It's not moving up because you're buying $10,000 worth. Billions of dollars, trillions of dollars are coming into the market, right? The market is not stupid, right? People think they can they can overdo the market. They can predict what the market is going to do. Just follow the markets, right? Don't try to oversmart it. Don't try to overdo it. Just see the market for what they are. Keep your risk management, right? If you're wrong, you should not put all of your money on one trade and then cry that this happened, right? Keep your risk management in place and follow the trend. Nevertheless, I still think the rally continues, gets everyone bullish, and then whatever the pullback needs to happen happens. I don't see any pullback yet. All this dip on SPY particularly was 0.6%, 0.56% to be precise today. That's not a dip. That's a minor, very very small pullback, right? Cannot even consider that a dip. However, on Apple, yes, it was down 4%. People say that it's because of this downgrade. Uh, I think Barclays downgraded it from 161 to 160. That is all nonsense, right? It's the beginning of the year. The hedge funds, the big institutions are rebalancing their portfolio, and all this crash nonsense that is going on. Market is just teasing everyone, and I think once everyone is back to being bearish, which I already see people are, the market is going to go right back up. All right, so thanks for tuning in, and that's all for today's video. Hope it helped.